think I'm just trying to push my luck a little bit. Sometimes the webcam works and sometimes it doesn't. I just feel like it's a little bit more enjoyable that way, but I don't see that option. If not, no big deal. No, looks like not. Okay, no worries. Welcome everybody. You guys have a nice lineup here. Hope you're, I know you guys are getting a lot of information thrown at you, which is good. Obviously, got to filter through and find out what works best for you, and come away with all these different approaches to trading, and kind of filter it down, whittle it down to find something that you can rely on. So I might not be for everybody, and I can tell you I'm definitely not for everybody. So just maybe approach it with an open mind, and let's make it interactive. I can get through the content in about 45 to 50 minutes. So it's nice that investing kind of breaks it up for us a little bit, and we have a little bit more time to work with you rather than just kind of rush through. So if you have questions, I'm going to pop the questions out right there. Go ahead and throw them in there if they're relevant to the current slide, or what I'm talking about. I'll stop and address it. If not, maybe I'll just ask you to hold on to the end, and we can talk about it then. So if that sounds good, let's get rolling. Mike, I've traded all markets. I'll tell you a little bit about my background, but I've traded the stock market right out of college. Actually, I traded stocks in college. Then went to the futures market. I was working at a CTA. Then actually jumped into the foreign exchange markets when it was really hot, and it's a good technical analysis. It's a good market that respects technical. So I did Forex for about 5 or 6 years, and then I left and went back to my roots, which are stocks. But that's a good thing, with the technical approach, you can really trade any market, and I think that's the key, to focus on the markets that are moving and showing good volatility. So I've traded every market. All right, and Brian, Motiveway Forex user. Wow, does everybody still know me as a Forex trader? That's pretty funny. All right, let's get rolling. So screen is showing. I don't want to give up on this audio thing, or the screencast yet, but view. That's all right. Maybe they disabled it. Oh, that's okay. Yeah, that's me. I actually just replaced this desk. I have 2 stand-up desks. I don't know if you guys are kind of in that craze yet, but for trading, and especially if you're on your butts a lot, I think the stand-up desks are great. It puts you in a little bit more of an offensive posture. I think you keep the energy going, which obviously trading is a high energy job, whether you're short-term trading or position trading. So if you haven't gotten in the stand-up desk craze yet, do it. I've replaced this white desk here with a stand-up, and both my desks are. So, and the prices are coming down, which is great. So that's my little public health announcement for the day. So anyways, we'll talk about trading Fib. And like I said, my entire career has been in the trading markets. I'm not somebody who, was in an industry for a while, got burnt out of it, and then tried, my hand as a trader. This is what I've always done, always wanted to do, even when I was like 16. So this has been my entire career in the trading markets in one shape, form, or another. I first was exposed to Fib back in 2002. So I guess it's 2017 now. So I guess I've been doing it for only 15 years. So that's, one of my preferred ways to look at the markets. Not for everybody. I'm sure you've all heard about Fib to one degree or another. And there's a lot of education and stuff out there, and, a lot of kind of voodoo, crazy out there theories about Fibonacci and the way it's applied to the trading markets. And I certainly think there's something to it, and it's fun to read about when you have a couple hours to kill. But in terms of like trading, I use it just because it works, and I can show you some kind of shortcuts in the way I use Fib and apply it to the markets. So you're not going to hear me go down about, all the theoretical voodoo science and art of Fib. So just know that, and I'm not discounting it at all. I've got a lot of friends and mentors who have taught me, who really get into the craziness of it, and it's pretty entertaining. But when it comes to trading, let's just break it down in simple to follow trade setups that just work. Okay. TJ, yeah, that's funny. You saw that my video switching from Mac to PC. Yeah, I tried it, but I just went back. I got a new Falcon trading computer, and I use this Mac Pro to do editing for videos, like for my trading videos and stuff. So yeah. So anyways, who right now is using Fib? Do you use it actively? Do you not use it? Never heard of it? You think it's voodoo? You think it's evil? Maybe you know enough to be dangerous? Just go ahead and type in, and let me just kind of get a feel for the room, so and I can kind of tailor the presentation as we're going, just based on our experience. So a lot of Forex traders in here. Okay. Trading with limited success is Mike, Spot Forex. I do every day. Johan, awesome. Me for Forex, Mike P. Okay. No, keep going, guys. Come on, get those keyboards out. I want this to be interactive. I use it, but it's not. I use it, but it is not weakening in effectiveness. Yeah, me. Okay. Auto fibs. That's cool, Grant. How do you do auto fibs? Raymond, yes, I use fibs every day. Awesome. No, don't use it. Don't use it. Anybody think it's evil? Voodoo? Witchcraft? Never used it. Okay. All right, perfect. So we got limited success. Generally, about 61.8% of the room, it feels like, use it, and 38.2% of the room doesn't use it. So it's generally what I find. It's just a really bad Fibonacci joke. So, all right. So let's get in. Obviously, you can tell I like to have fun with this a little bit.
Todd, I'm not sure what happened, but we lost sound about a minute ago.
Okay, yeah, make me an org. I've never seen that before.
All right, Todd had a technical glitch, so we need to get him back restarted in the room. So hold on a second. Don't worry, we'll figure all this out in the editing. The replays will be seamless.
Yep. Sorry about that, guys. I've never seen that before. Motivate or about that. All right. So thanks for getting me back in there, Dan. Appreciate it. All right, we'll keep going.
Hold on a second. I want to make sure everyone can see your screen first.
Oh, got it. Screen number 4. There we go. Big red warning sign.
Yes, we see the big red one. Everyone okay with seeing Todd's screen now? Awesome. All right, thanks. Go get him.
Okay, thanks. Sorry, guys. Yeah, I've actually never seen that before and go to webinar. I use it every single day. So, all right, we'll keep going. So we're going to talk about some live trades. I am a real trader. I've been trading, my whole career, and I know, if you guys are newer to trading, or if you are a little bit more experienced, or you've gone through that learning curve, you guys know what it's like in the beginning days. It's tough. So, I'm somebody who's, as I said, dedicated my entire professional career to trading. So I have a lot of respect for the business and the people that I work with. I kind of ask the same from you. So what you'll hear from me, obviously, is my approach to trading. I'm not somebody who's like, this is a get rich quick scheme, and just use this simple indicator, and you're gonna make 40% a year all the time. It's just not reality. So I'm somebody who kind of approaches the markets like a boxing match. In the beginning, you're going to wind up in your butt a few times. You're going to wind up on the mat. You never try to get the knockout. You try to win the decision at the end of 12 rounds, and you're not going to get through unscathed. So you are going to be, risking capital. You've got to be comfortable with the capital you have at risk. You've got to accept the risk, and not only your overall account, but every single trade you get into. And as I said, this is not an exercise in sharpshooting. This is an exercise like a boxing match, and it's going to be a boxing match that's going to really test you. Okay, so don't trade with money you can't afford to lose. You got to be willing to accept the risks and have the intestinal fortitude to go through this. This game is not for everybody. Okay, so I will be showing some live trades, trades that work, trades that didn't. As I said, I win some, I lose some. I'm not somebody who's going to sit here and tell you this is easy and try to blame you if you have a hard time in the beginning. It's just not reality. So let's talk about that. Going back, way back when you first started trading. For me, I first started trading in college. I'm from upstate New York. I was a ski racer in college. I wasn't really into college classes that much. I was more into ski racing, the social activities in college, and trading. And one of the books I read in college that really made an impression on me was, you remember that red book, Alexander Elder's Trading for a Living book? Well, really good book. I read that, and he kept introducing indicator after indicator in each chapter. And like senior year in college, my charts looked like this with like 5 indicators. And I think I had like 7 or 8 at one point. And it just got to be like so many different indicators because I was just trying them all out. I got my first job trading out of school. I moved to San Diego and I was trading for a living. And I got there and my bosses are like, Todd, what the hell is all over your charts? Like there's indicators everywhere. So they kind of forced me to go through this evolution, which is more like a de-evolution. So I started to eliminate all these different indicators because they were kind of causing me to be like paralyzed, right? Paralysis by analysis. So I started to eliminate that which doesn't work and just give me conflicting signals and just too much information. So fast forward 15, 16 years later, and my charts look quite a bit different these days. And what you'll see is some letters and basically some of these horizontal lines, which is the Fibonacci ratios that I'm going to introduce to you. And the idea is rather than kind of wait for these indicators to flip off signals, which, as I'll show you in this presentation, are only reacting to price, what I want you to do is start to anticipate price change with these Fib ratios. Now, the concept, the indicator de-evolution that I went through, I kind of like to think of it as the minimum effective dose, right? Use just enough, just use the recommended dose, not any more, because anything more will be harmful. Use just enough to be effective. I have twin boys now. They're like 3 years old. Anytime they get sick, you just want to like dose them with a whole bunch of medicine to get rid of it. Because of course, when one kid gets sick, the whole family gets sick and it's a nightmare. So, obviously I'd like to give them the whole bottle of cough medicine or whatever, but obviously you can't do that because you're going to hurt the little guy. So you got to use the recommended dose. Trading is really the exact same thing. I think you got to use just enough to be effective, but anything more can be dangerous. And I'm going to pick on indicators here a little bit. And as I said, like I've spent my entire career studying this business and I've looked at every possible indicator in every way. And, I just have never really found a way for me to be able to consistently make it work. And just to illustrate that point, here's an entry that I'll teach you in this class right here. So we move down into this cluster of Fibonacci support, which I'll show you how to calculate. Standard entry is going to be here at about $104. Okay, so that's fine. Let's compare that to an entry that you're going to get from MACD, which is an indicator that you all probably know, moving average convergence divergence with the default settings of 12.26.9. MACD is going to trigger you in when the black line cross above the red line, and that's going to be in at $108, right? So you're talking a $4 difference on a daily chart of the Qs to get you in. In today's market, if you're giving up $4 on a daily chart in terms of an entry, that's pretty scary. And it's not $4 of potential profit that you've lost. It's in fact $4 of additional risk that you're taking. Now, it might seem comfortable to say, well, wait for the MACD to cross up because that's when the momentum is changing and the stock is likely to break out. Yeah, possibly. But today's markets are very choppy, and they're very different than they were in the last 20 years where breakouts used to work. Today, breakouts are tough. Okay. And what you're doing is just basically taking a momentum change, which is produced by a reversal in the underlying market, and hoping that the breakout does in fact work. Well, as I said, the markets have changed with algos and HFTs and hedge funds and buy-side traders and everyone and market makers trying to compete, to generate some return. It's changed the dynamics of the markets in the last 20 years. And basically, in the presentation that I'm going to give you right now, the whole point and everything that I want you to take away is you need to get better entries. You got to anticipate your entries, which keeps your risk low, and it makes you rely less on momentum breakouts. Okay. So to give you kind of a look of, not only do I do short-term trading, with Fib, but you can also do longer-term projections with Fib. So I'm going to play this video. This is about 20, 30 seconds, then I'll come right back to you.
Tom, we're going to give you some props because 3 months ago, you said that oil would fall to 26 bucks a barrel. Listen to this.
I think you guys are going to be shocked to hear this. Technicals say in a good, solid pullback, we should see an equal leg push in the current move lower. A 77% drop from the reactionary high of about $114 puts us at $26 in the crude oil market.
All right, fast forward to last Thursday, oil fell as low as $26.05. Todd, why were you off by a nickel? I'm kidding. I'm just joking. So now that you are the oil guru, technically, where do you see oil headed from here?
So I was crude oil. I mean, and not like looking back and saying, hey, here's what I did. Look how smart I am. But I was kind of credited as the guy on CNBC who called the low in crude. And it went viral. Like it was the number one article on CNBC.com, Yahoo Finance. Like my website kind of went crazy during that period. And all it was, guys, was just two simple Fib studies. This is really all it was. And I can teach you to do right here. And everybody was calling for crude, down to $10 a barrel, $5 a barrel, $1 a barrel. I was like, ahead of time when it was at 26, 40, or when it was at 36, 40 bucks, I was like, guys, 26 is going to be the low and that won't be the low. So that's all it was. It's just two simple Fib studies. So if you guys don't know me, just a quick intro. I'm Todd Gordon. I run tradinganalysis.com. Obviously, you can tell I like to have some fun with this. This is enjoyable to me. I like working with new traders. I am an ex-hedge fund Wall Street guy, left in 2010 to start my own retail business. I met my wife, Trish. We had twin boys, Jake and Brody. They're now 3. So I wanted to kind of be home and not working crazy, investment bank or hedge fund hours. I wanted to run this business at home, hopefully build it up big enough to hand over to them. Just I guess I gotta show this picture. So we got married. We had a reception at Trump National in Bedminster. He wound up being there. This is my best man, Jeff, doing the best man speech like they do, absolutely destroying me. So Trump knows all the bad stuff I've done in my life. He was there. Trump and Melania were laughing, shaking their heads as Jeff is crushing me. I do CNBC, been doing it for about 7-8 years. I'm in my third 3-year contract with NBC. They usually rely on me for the technicals. And now I run tradinganalysis.com, which is my research business. So that's me. Okay. That's who I am. So enough. Let's dive in. Myths, facts, technicals don't work when markets are highly emotional, and technicals are self-fulfilling prophecies. Have you ever heard this, said this, thought this? And specifically, I'm going to be referring to Fib. Do you basically throw the Fibonacci out when markets get crazy, or do they only work because people know the levels are there and that's what causes them to work? Well, let's look at a chart. So from 1923 to 1929, you guys know what happens next, right? Crash. Market absolutely gets smoked. So the roaring 20s brought the 1929 crash. And where did the Dow crash to? Well, it held this level once, bounced up, tested it again, sold off, retested as resistance, and then sold off. What was this level? This wound up being the 61.8%. This is one of these Fibonacci retracements that I will teach you today. So the entire roaring 20s, we crashed down into the 61% retracement. So back to that last slide, technicals don't work when markets are highly emotional. Well, that was an emotional market and the technicals worked. And number two, they only work because they're self-fulfilling prophecies because people know the level's there. Well, that one doesn't hold water because Fib won't be applied to the markets for another 50 years. It wasn't until the late 1960s, 70s, and then into the 80s is when Fib actually started to be applied to the trading markets. So just two really nice, just a nice example there of Fib coming into play. Does it work all the time? No. The other thing I'll say is those of you who are familiar with Fib, if you're only using Fibonacci retracements like I'm showing you here, you're going to have a hard time making this work. You've got to use the other tools that are available to you to help to build zones of support and resistance. And that's when you can come up with some pretty awesome turning points that others don't see. It's going to go, the whole point, my presentation, I already mentioned it earlier about getting better entries, and we're going to use Fib to do that. It can be summarized in this slide right here. Anticipation equals performance. It's the ultimate power. Losers react, leaders anticipate. And that's what we want. That kind of mindset is where I like to approach the trading markets. So it's this concept of anticipating like a market maker or reacting like a market taker. So the way I kind of look at the markets, and when I work with newer traders, people sit down, and I just watch what they do. They sit down at the desk in the morning and they just look at price and it's going up. So they just buy. And then the market starts to sell off and they sell, and buy, sell, and just kind of trade without a plan. And I view that kind of person as a market taker, just kind of reacting to whatever the market's giving him that day. A market maker, on the other hand, is somebody who sets the price, who determines where they want to trade. Okay. Now, true market makers get, given liquidity all day, people trying to get in and out of positions, but they can figure out where they want to offload inventory or where they want to hold inventory. And their trading is a little bit more like pre-planned traders. So if you're a market maker, you're determining to the market where you want to trade. And I think you need to approach today's trading markets like a market maker. And rather than reacting and following the herd into breakouts and chasing everyone else, you need to step ahead of the crowd and anticipate. When you anticipate trades and dictate to the market where you want to trade, that puts you in a position of strength. So for an example, here's Amazon on a 195-minute chart. Again, the market goes down, test their little zone of Fib support, which I'll teach you. There's your entry. You're in about $740. Let's pick on MACD again. This guy's going to trigger you in up here about $747. So you have a $747 entry up here. You have a $740 entry down here. Down here, you said, here's my zone of support. We held. The market should not break below here. My stop is very clearly defined. So when the market comes back to retest you after being up $10 in the trade, you're like, oh, this sucks, but it's okay. It's no big deal. I did kind of count this into my game plan. I have a good entry. I have options. Okay, not stock options, but I have options as to what I want to do. If you follow the momentum in using the MACD signal, you said, oh, the market's just going to break higher. You didn't anticipate the market dropping $10 against you, making you freak out a little bit. And you're like, oh, no, what do I do now? I didn't even think that the market would go from 750 down to 735. Maybe you stop yourself out. You can't take the pain anymore, only to watch the market rip higher where you thought it was originally going to go. That's terrible. And then you're really, really upset. You lost $15 on Amazon. The market's now at $770. We've all been through that before. That can be avoided by just simply pushing your entries down deeper into support, giving yourself options and giving yourselves outs in the trade. So what I'm doing with all this Fib stuff is just to do that. Improve your entry, which minimizes your risk and also minimizes your emotion and bad reaction to a trade that's not exactly working out like you thought. So 3 main objections to Fib, which all are very valid. Where do I start and stop all the analysis? Which one of these 1,000 ratios in my chart will actually reverse price? And all the different tools are confusing. All very, very valid objections. I think I'll be able to overcome all of 3 of those for you right now. So this is the Fibonacci trading scroll. It's a 6-step process. It is on display. It was handed down to us from old Italy, 14th, 15th century. It's on display in the Louvre in Paris. Swear to God, no, I'm just lying. But this is a 6-step process that I can start to make Fib a little bit more logical, kind of break it down into a process. And at the end of the presentation, you'll walk away with a trend trading setup using 2 tools of Fibonacci analysis. Okay, so if that sounds good, let's roll. Number 1, we got to talk about swing waves, and just keep in mind, I'm actually not going to get to Fib until step 5 of this process. Okay, so steps 1 through 4, we're not going to talk about Fib. We're going to talk about price behavior and then tie that into Fib, which is going to reduce the subjectivity of Fib and make it actionable. Okay, so number 1, let's talk about swing waves. A swing wave is basically a short-term change in the trend. And determining or depending on how many bars don't exceed a short-term change in the trend, it will be given a minor designation or a major designation. All right. Now, a minor designation is a higher low in the market that is not exceeded in the 5 bars above and the 5 bars below. A major, and don't worry, I will show you some live charts here, and this will make more sense. Let me get my drawing tool out here. So a major swing wave is going to be given a blue dot, and a minor is going to be given a purple dot. Okay, so a minor swing wave is a higher low in the market that is not exceeded in the 5 bars before and the 5 bars following. If you've got a high, like this candlestick is a high bar, so you count 1, 2, 3, 4, 5, 5 bars left, 5 bars right, that guy's given a purple dot, and that's called a minor swing wave high. Okay. If you have a higher low in the market that is not exceeded in the 13 bars before, and the 13 bars following, it's given a blue dot, and that's called a major swing wave low. So on my charts, you will see here's Facebook. We actually just put a Facebook trade on. So you will see these purple and blue dots on my charts. Those are going to be your swing waves, the minor and major swing waves. They just basically help you identify the changes, the significant changes and the minor changes in price. Those are going to be the foundation around which we'll build the Fib. Okay. Step number 2, as I mentioned, this is going to be a trend trading strategy. So we got to identify the predominant trend. All right. We got to know what the trend is. And the one indicator that I use pretty consistently is called the DMI Oscillator. And the DMI is an old school indicator by Wells Wilder back in the, 1950s or 60s or whatever. Traditionally, you're used to the DMI as DMI positive and negative. I like to switch it over to an oscillator, and I've built this presentation in Thinkorswim. So anything you see here in Thinkorswim is available if you guys have that platform. So the DMI oscillator basically breaks down like this. If you're above the 0 line, which is right here, and the oscillator is above 0, you're in an uptrend. If you're below 0, the market's in a downtrend. This is Chevron on a 60-minute chart. Oscillator is negative, which means we are in a downtrend. So you need to be thinking shorts only. Okay? And what we're going to do is wait for the market to pull back to get short, an expectation that the trend will resume. And again, the trend is determined by the DMI oscillator. Now, one thing, if you guys are used to the DMI, traditionally the default settings are like 10 or 12 or 14. I bump them way up to 55. And basically what it does is it smooths out the trend. You don't get so many false signals. Okay. So we just quickly introduced 2 tools. Number 1 are the swing waves. And number 2 is the DMI oscillator. This is Facebook on a 195-minute chart. Clearly, we're in an uptrend. There's the DMI in green right there. Facebook is ripping on the top side. So that's that. All right. So those are 2 important tools. Okay. Let's combine these tools. So if the DMI oscillator is positive, which it is here because we're in an uptrend, first step to begin to build this trade setup for you is find the most recent swing wave low, major swing wave low. So look for the most recent blue dot. And this indicator I'll give to you so you can plug into your charts. Find the most recent blue dot low when the market's in an uptrend, and there it is. From there, you're going to find the highest price following that blue dot. There's the highest price. You'll notice this guy has a purple dot, which means there's 5 bars left that have completed and 5 bars right. but not 13 yet. And once the 13th bar closes, this guy will turn blue, but that's okay. You want to find, in the case of an uptrend, find the most recent major swing wave low, which is right there. This is the most recent trend wave that you're going to use to start basing your fib around. Okay, the overall trend is up, but where do you start and stop your fib? And that's going to help us break it down. So this is Google 60-minute chart. We are in a downtrend because the oscillator is below zero. We're heading lower. You can also use these blue dots, which are major swing waves, highs and lows, to determine where the waves are. And there's two separate swing waves, downtrend waves on this chart, number 1 and number 2, because they're capped with blue dots. The overall trend is down, but there's two separate waves, 1 and 2, that are capped with blue dots. You also can use these blue dots to figure out where the trend corrections are. So right now, this is Amazon on a 60-minute. We have a blue oscillator situation, so we're in an uptrend. Okay. Anytime you get a counter trend, blue dot to blue dot swing, this is an uptrend. So if you get blue dot high, major swing wave high to major swing wave low, that's a correction. Number 1. Here's a blue dot high to blue dot low. That's number 2. And this was interesting. This did put a blue dot in, tried to put in a low and tried to break out, but ultimately failed and went down and did a deeper correction. That's fine. That'll happen. And then we have a third one right here. So there's 3 separate corrections in this uptrend. We're in a downtrend again. This is that same Google 60-minute. We're in a downtrend. Okay. And there are 2 separate trend interruptions or corrections. So there's a blue dot low to high against the established downtrend. And there's a blue dot low to high here. So there's 2 separate corrections. You are going to use these later on for fib calculations. Okay. So finally into the presentation about fib, I get into my first Fibonacci piece of analysis. Okay. But we're going to take what we just learned with the DMI oscillator, which is right there, and the swing waves to help figure out how to apply the most basic fib, which is your Fibonacci retracement. Now, before I do this, let's just take a step back and talk about this. Like, your trading, like, I don't care what you've been taught, but the whole mission in trading is this. 80, 70, 80, and sometimes 90% of your trades are just your goal is to accomplish this. You want to buy short-term weakness in rising markets, and you want to try to sell short-term strength in falling markets. That's it. That's everything you're trying to accomplish in trading. Between 70 and 90% of your trades, you're trying to accomplish these goals right there. There are times where you can counter trend trade and try to sell tops and buy bottoms, and I do that. But most of the trades you do, and I don't care what tool, if you like fib and you want to use it, great. If you want to use indicators, okay, whatever. But you're trying to figure out how far a correction might last, giving you an entry that's very competitive, like a market maker entry, which is as close to support for longs as possible. And when you deal close to support, you keep your risk low and your reward high. Retracements are designed to do just that. They're trying to figure out how far this correction might last compared to the prior trend wave. How do we determine the trend wave? Well, number 1, we look at the trend of the market, which is up. Number 2, we look for the most recent blue dot low. Then we go up to the most recent high. That is your very objective step-by-step way to apply Fibonacci retracement. And these retracement levels, these ratios, are possible stopping points for this correction. And these guys are target entries to get you into pullback trades as close to support as possible. Now, one of the most obvious questions that I hope you have in your mind right now is, how do you know which one of these will hold? And the answer is you can't. You can't know. So you have to add another tool to it to help figure out how far this correction might last, giving you a competitive entry. Good question there, Damien. Yeah, this is applicable to everything. And I used to be the senior technical analyst for Forex.com for like 7 years. And I traded for their parent company's hedge fund. I know a lot of you guys are Forex. So I have a lot of, I used to trade for $100 million Forex hedge fund right before the credit crash. And then all the investors pulled their money back and wound up down to like 25 million. But yeah. Yes, I have a lot of experience in Forex, and I perfected my fib in the Forex markets. I just like the stock market now. So yeah, I know I can tell a lot of you guys are Forex. So yeah, trust me, like 7-8 years ago, I was the Forex guy. Actually, for 2 years, you guys ever watched the Money in Motion show on CNBC, the one Forex only show? I was the technical analyst on that. I don't know if you guys remember that show at all. Yeah, everything I'm doing, trust me, I perfected this in the Forex markets, and fib is awesome in Forex. It's just, I just don't like Forex anymore because all central banks just dropped interest rates to zero. You know, what makes FX changes is interest rate differentials, and that just kind of went out the window. So I just kind of moved away, but I mean, yeah, you could trade anything with this. Okay, so let's keep going. All right. So what's the trend in this market on Amazon? Uptrend. And I'll pull up some Forex examples later, so don't worry, guys. 786 TJ, that's fib. 764 is not a Fibonacci level. So 60-minute Amazon uptrend. We have oscillators going up. So we want to find the most recent blue dot low. Where is it? There it is. That's your starting point. And then you're going to go to the highest price. At this point, this guy's got a purple dot, so that means we have at least 5 bars right, 5 bars left that is closed that have not exceeded this high. Once you get the 13th bar, that'll turn blue, but that's fine. So on thick or swim, you hit the drop down, you go to retracements, and you're going to click the beginning of the uptrend first, and then the uptrend next. These are your possible pullback points, 38, 56, 18, and 786. Okay? And again, how do you know which one is going to hold support, giving you an opportunity to be long? You can't really know. You've got to add some more fib to it. So you're looking for one of those to hold and to move higher. Okay. So let's do some live stuff. Okay. Let's just do some live stuff. I think swims right there. Okay. I just put a Facebook trade on 195 minutes. So how do you draw a retracement? Well, the market is in an uptrend because DMI is up. So we're looking for the most recent blue dot low, and there it is. And then we're going to go up to the very high. You got to find the highest price following the blue dot low. So that's going to be right there. So the proper way to draw retracement is to go drawings down to retracements. You click the blue dot low first, up to the high. And if you can get a pullback, that's how you properly draw a fib retracement. Now, I almost never buy less than a 38% pullback from the most recent major swing wave low. That's a major swing wave low. The purples are your minors, or sorry, it doesn't make sense because they're both M&M. That's all right. So I don't buy less than a 38%, and I don't buy more than 786. So that's your zone right there, 38 to 786. Okay, that's your buy zone. Over to a short-term chart here. Facebook, this is, and I'll do Forex in a second here. I know you guys are a big Forex crowd. So this was my entry yesterday or today. So well, it's actually not valid anymore because this was the most, okay, so this was the high price. So I found the most recent blue dot low, which was right there up to the high. We went down, tested support, and then I'm long. So actually, so the new retracement would be drawn like this because we have another blue dot low, which just formed. So there's another blue dot low right there. But throw some Forex symbols at me or whatever symbols you guys want me to take a look at. And if you can, throw me a time frame too. And I'll look. So Euro, this is the 1 hour. Looks kind of messy. And you can't do this on every time frame, okay? You've got to find setups that are good. All right, so this is a good one. Okay, so here's Euro. This is the daily. Okay, so we're in a downtrend. DMI Oscillator is down. Find the most recent blue dot high. That blue dot is below. Okay. Okay, this blue dot and this blue dot have been exceeded. So the blue dot you're going to use is right there. You're going to find the most recent one that has not been exceeded. So you go drawings, retracements, down to the absolute low, which is right there. Okay. So 50% retracement held once, sold off. Tried to hold again, but we did spike up to 618 and then we broke away. So that's actually an interesting one. Dollar Swiss. Boy, I haven't looked at a dollar Swiss quote in like 5 years. Or ever since the SNB pulled that ridiculousness. Okay, dollar Swiss on a, Brian just gave me dollar Swiss. Okay, so downtrend. So here's the most recent blue dot high. And then here's something that I'll teach you later on is called retracement zone stacking. So that's the most recent blue dot high. We're in a downtrend, so you find the most recent blue dot high down to the low. And then you can even use a blue dot before that. And there's going to be a blue dot here. It's hidden behind this bubble. So you just click up there and then down to the same low. And this is how you start stacking the zones. Okay, and I'll use a different color. Really good zone in dollar Swiss between 1.008 and 1.010. Okay, give me something else. Aussie Swiss. I just did Swiss. Let me do dollar yen, Steve. And if you have a time frame, throw them at me. And again, how do you set up trades here? You can't. I'm just showing you how to properly draw retracements. Okay, this is daily. We're in a downtrend in the daily, believe it or not. So the most recent blue dot high is right there. Click once, you get onto the absolute low. Your trading zone for dollar yen is from 112.16 to 114.35. Okay, just give me one more. And I just want to make sure you guys are cool with how to draw retracements. Apple for, ooh, come on back. Really sweet fib entry that we actually did get right there. This was back a couple of weeks ago. Really nice zone of entry right there. I had a put credit spread on, which is an option trade that's long, and actually we just took profits on it. But Apple. Whoa. Look at that. Something's off there. Maximize sell. Okay. So for Apple, we're in an uptrend. Most recent blue dot lows right there. And then we just go up to the absolute high from there. So that's how you properly draw retracements. Okay. Yeah, Jermaine, I primarily trade options. I just put a put credit spread on. I sold the 142, 140 put spread in Facebook. So, yeah. I thought I did. Interesting. So I didn't get filled. I got to get filled on that. Okay, never mind. I'll be back. Okay. I got filled in this account. So there's the 142, 140 put spread I just put on in Facebook. I got to get the other fill on. Maybe I'll do that live. All right, so that's retracements. Okay, so let's go on to step number 2. All right, the next fib study. So retracements, what we do is study the prior trend wave to help figure out how far this correction wave is going to go. So you study trend compared to ongoing correction. The next step is you're going to apply and study not the prior trend wave, but the prior corrective wave to help figure out where the ongoing corrective wave might stop. And this is one of the most powerful forms of fib, in my opinion. So comparing correction to correction. And those of you who have studied fib a little bit, you'll know the 100% is a key one, and they call that the measured move or the two-step or AB equals CD, or there's a bunch of different names for it. So all that means is, let's say this blue dot to blue dot correction, and that's the key to identifying the most important corrections, is you're finding counter trend blue dot to blue dot swings against the established trend, which is up. if that's a $3 drop, you're really going to want to look for the $3 drop to come in, because a lot of times that measured move or $3 will act as support. Okay. And sometimes we look at percent change charts when you get on longer time frames. But if the 100% measured move doesn't come in, you're going to have the 618, the 1618, sometimes the 200%. You're going to find these Fibonacci projections coming into play to help you figure out where this correction might go. So basically what you're doing is you're taking this distance, multiplying it by your fib ratios, projecting it off of this high, and these several levels will come into play. Okay, and let me just kind of show you this live, and I'll pull this together, and this should make more sense. So this is S&P on a 15-minute, and we're on a 15-minute. We're in a downtrend because the DMI is down. Okay, so we're going to look for the most recent corrections that are defined by the blue dots. Okay, any blue dot to blue dot counter trend swing will be a correction that's significant that we want to study. So we want to try to figure out how far this correction right here is going to last by looking at the prior ones. Well, purple to blue, so that's no good. We're looking for blue to blue, which is right there. There's a good one. Okay, purple to blue, no good. Here's blue to blue. Blue to blue, that's a good one right there. Purple to blue, no good. Purple to purple, no good. Purple to blue, no good. So we have two separate corrections that are significant that we want to use to figure out how far this correction might last. Guys, when you're trading a good volatile market that's showing good price dynamics and trend and volume, the past price swings will have an impact on the current price swing. It's like when you're trading markets that are like this, down. I find Forex is like this a lot. Down and up and down and up and down and big trend and just kind of all over the place. I think that's where you get chopped up. I want to trade markets that are showing good follow through, good corrections, good pattern, good rhythm, price structure, stuff like that. Forex, when it goes, it's amazing and there's a lot of profit potential, but a lot of times it's just chop, 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 and there's nothing really you can do about it. So let's study these corrections to figure out where this correction is going to go. So on Thinkorswim, you hit the drawing tool and you get down to this guy, which is called Fibonacci extensions. Now, just a quick word. These are actually not extensions. Thinkorswim and a couple other platforms made a mistake. They're actually called projections. Okay, projections. Okay, so you're going to hear me refer to them as projections, so just keep that in mind. So it's a 3-click tool. So what you do is you hit the beginning of their prior correction, click that once, click it a second time at the top, and then click a third time down here, okay, and the ongoing correction. So what you're doing is you're going to capture the distance traveled right here and compare it to right there, all right? So these levels, the 61%, the 100%, the 1618, and the 200%, those are all projections from this guy right here. The 100% didn't do anything. We actually broke above it and used it as support. And then we went up to the 1618, which is right there. Now, don't forget, we're also going to study this blue dot to blue dot correction. So this guy right here is going to be the blue ones. And I left the red ratios up as well. Okay, red to red, I left those guys up there. Now, here is the 100%, what you call the measured move or something, 2141 to 2153. So that's a 12-point move in the S&P. That's a 12-point move. And that's why that's a 100% projection. So what you're starting to do is get this guy's opinion to figure out where a zone of resistance will come in to offer you a competitive entry zone to be short in expectation that the trend will resume lower. Yes, on Ninja, Frank. TJ, no, markets, I would say markets trend anywhere from 10 to, 25, 30% of the time on average. Generally, rule of thumb, and I don't know if there's any way to quantify this, but yeah, markets generally range around 60 to 80% of the time. Okay, so let's go over to some live markets and let's practice this fib tool. Okay. And throw some symbols at me. And what time we start? 1. Okay, we're good. We're good. 51. Yes, on Ninja, Frank. Throw some symbols. Crude oil 3 minutes, Johan. Whoa, that's short term. Okay. Actually, I don't have can I do a 5-minute? Is that cool? I don't have a 3-minute setup on TOS. Okay, so here's a good one. Okay, so we're in a downtrend. All right, so we're in a downtrend on crude. The most recent retracement is going to be here, but I'll tell you what, we're doing the projections now, which you hit drawing and actually go to extensions, which you now know are called projections. So here's a good setup. So here's the most recent counter trend. So it's a blue dot low to blue dot high, which is against the established trend, which is down in crude. So you click 3 times. You click once, you click twice, and then notice it's attached to my cursor. Okay. So this distance right here from 0 to 100% is exactly equal to this distance right here. Okay. So I'm going to click once, I'm going to click twice, and I'm going to click a 3rd time here. You'll want to pay attention to these ratios on the way up, which are 38, 618, and specifically the 100%, which is going to be at 51.55. Now, the other thing you want to do is, why don't we do a retracement? The trend is down, right? Why don't we do a retracement from here? And then I'm pushing the envelope here a little bit. This is beyond what I normally do in this marketing class here, but I'm also going to do a retracement off of here and come up with a pretty good sell zone. So let me go drawings, retracements. And I'm not going to explain fully what I'm doing here. I'm just going to arrive at the point of where I think resistance will come in crude. And I'll explain it later. Sorry to just do this without talking, but let me just, as I said, just kind of arrive at the point. There's really good resistance in crude in a fib zone from 51.34 to 51.41 and 51.49 to 51.55. 2 really good zones of resistance. For me, if you're short term, you can say maybe these will act as attraction zones and try to get up. But I'll tell you what, you probably don't want to be long going into these zones. You probably don't want to be long. I would expect that or that. Okay. All right. Let me go back. Okay. So throw some other markets at me that you guys want me to look at. Gold. Got it. Daily gold. Thank you. Get off the 5-minute. Okay. Maximize. So, okay. So obviously I've got some, fib already drawn here. Major attraction zone up here at 1300 in the gold futures. Let me just get rid of everything. So we are in an uptrend. Okay. So the most recent blue dot to blue dot correction is here. So you want to go drawings, extensions. You want to go blue dot high down to the blue dot low off of that move right there. So 38, oops, let me just do that again. Blue dot to blue dot right there. Okay, perfect. So if you get a correction here, one of these guys will probably come into play. Let me get off of this and go to a smaller time frame. Gold. We're in a downtrend. Is there any blue dot to blue dot? There is right here. So there's blue dot to blue dot here. Blue to blue. I want to compare that guy to the ongoing trend. So your blue dot to blue dot, those are the most significant ones. So you go down here to extensions, you go blue dot to blue dot. And let's just see if this guy came in. Yeah, so for here, using that prior blue dot, look what happened here. 100% tried to hold, offered some. 1272 didn't do anything, but the 1618 gave you a double top and a double top. And then we've sold off. And remember, we're also going to do retracements because we're in a downtrend. So where's the most recent blue dot high? Right there. So you click once, you go off the top. And this is what you're looking for. You're looking for an agreement between the two. The 38% price retracement and the 1618 projection wound up being the top in gold. And that's where I want you guys trading. That's how you get competitive entries to keep your risk low and your reward high by getting very competitive entries. So there's 2 fibs in there that are very tight and close to each other at 1250. That's what you're looking for. I don't really use the ADX, Kim. It's just up there. I don't really use it. Sterling Kiwi, huh? Boy, I haven't looked at some of these in years. Uh, 5 minute. Okay. Drawings, retracements, blue dot up to the high. Blue to blue right there. A good correction there. Okay, and then there's another blue to blue here. Blue to blue correction there. We're going to go off the top. I'm going to change the colors just to keep them separate. Let's go green. Zoom in a touch. And you just got to get used to all these 1,000 lines in your charts. And what you're looking to do is you're looking for confluence. Okay, you're looking for tight clustering. And it takes you a little while to get trained on this, your eyes, but it's pretty sporadic in here. It's nothing really, no tight clustering that's really jumping out at me. I mean, you could use this whole thing. This is a 30 pip zone on the 5 minute. That's going to be a really good zone. I wish they were a little more tightly clustered. They're not. They're pretty evenly spaced out, but you're going to look for that zone right there. I can get off of this and go to, let's go to higher time frame. And how am I doing on time? Okay. Real quick, we just moved into an uptrend. So you got blue dot, low to high right there, and you've got a blue dot to blue dot correction there. So you're going to go like this, retracements, blue dot up to the high, and then you're going to do projection of that swing to that swing. Buy zone would be right around 176 quarter to 175 quarter in sterling Kiwi. And you just got to have the patience to wait for it to come back against you. Okay, let me keep going. I'm getting too off track. I love setting up trades, but let me keep pushing. So obviously back on this 15-minute chart, what we want to do is look at the corrections and the corrections, which are in blue and red, but also you want to use the most recent swing wave, use a traditional retracement, and you're going to start stacking the zone. So the green levels are the retracements. The red and blue are your projections from the corrections. And when they tightly cluster like this, you've got 6 levels that say the S&P has resistance between 2152 and 2157. So you've got a 5-point zone of resistance here. That's pretty good, right? That's pretty good. And if you're a scalper, you know, you can scalp against that. If you want to sell options, do call credit spreads up there. If you want to do a put debit spread against it, if you want to do a butterfly, or if you just want to scalp in the Forex markets or position trade in the Forex markets, incredibly valuable to do that. And it doesn't require you to wait for the market to go up, test the zone of resistance, wait for the stupid indicator to flip over, getting you in way down here, which increases the size of your risk significantly. I want you short right there with a tight stop. That's how you become a better trader quicker. Okay, so that's what we're talking about, is waiting for the market to come into your zone of resistance or support and acting and getting very competitive entries. That's the quickest way to become a better trader. I guarantee you that. Guarantee you that.
And we have a pretty good resistance.
This is a little fib support. Those of you who are option traders, I just did this trade live. So a little zone of support in GDX against 29. This is the gold miners. And then there's targeted resistance up here in the 32. So I just set up an iron condor. Those of you who are familiar, I did a 28, 29 half, 31 half, 32 half iron condor, took in 78 cents. If you're not an options guy, no big deal. Executed the trade live. Boom. Sent the trade alert out to customers, told them exactly what to do. We went down into fib support. This one wound up working pretty well. It double tested the fib support zone here and then eventually moved up into our targeted resistance around 32. It was funny. This was over the summer, and I was just booking profits. I do these YouTube videos, which are kind of fun. I screw around and do like these trading vlogs. So I was up at the distillery, which I'm a part owner in a craft distillery, and I was actually just about to go to work on this still, and I had to close the trade out, so I just recorded it. It's pretty funny. I'll tell you about that in a little bit. And just executed the trade live, made $1,000, and that's just all from fib support down into fib resistance, all a pre-planned trade just done live. Okay. So this stuff, yes, you can actually trade this live. You can also counter trend trade. Okay. So I said about 70 to 80% of the trades you do should be in the direction of the trend, but 10 to 30% of the trades that I do are counter trend trades. And there's very specific circumstances that will come about that will allow me to do a counter trend trade. So this is one, and this is one of my favorite trades. And just kind of a disclaimer, this was very lucky. Okay. So this is not repeatable. It's not something I'm telling you I can show you how to do in the future, but okay. So this is Green Mountain Coffee. And if you guys remember, the stock went from like 160 to 40. It was getting absolutely killed. And the stock was coming into earnings, and we were moving into a pretty good zone of fib support. There was 1, 2, 3, 4, 5, 6 levels of fib support. So it's a 6-level FSZ. Earnings came out. That's what that marking means on Thinkorswim. There were bad earnings, and the stock gapped up. So I was like, okay, something's going on there. So I did a pretty aggressive options trade. It's called a bear call ladder, whatever. Basically what happens is I took in a credit of 5 cents. The stock either needed to go bankrupt and I can make a small amount of money, or if it rallies sharply, we can make a lot of money. If it goes sideways, that's when you get beat up the most. Well, the stock gapped up from bad fib support or good fib support on bad earnings because it was about to get bought out. So our options we bought options at 85 cents that went to $32. So that means if you bought an option contract for 85 bucks, it was worth $3,200. So I had clients in it, live trade. Like it was lucky, but it was a fib counter trend setup. It was legit. I mean, I had customers who like tripled their account overnight. It was awesome. Really fun trade. And I can't tell you I'll even ever do that again in my career, but whatever. So the profits from that coffee trade wound up going into my distillery. So I'm one of 2 owners in Upstate Distilling, which, if you guys know, but craft spirits are booming in the U.S., like where craft brewing was. So I bring my kids up there. They run around. It's fully dysfunctional. But anyways, so that's that. So guys, the whole point of the presentation here is I think chasing the indicators, waiting for the markets to change price, which is only thing that makes these indicators change. You're waiting for the price to change, which makes these indicators change. And if you're chasing the same indicators that everyone else is chasing, like how do you make any money with that? I've never seen it. I just don't know. So, I think you've got to anticipate price action, anticipate zone of support and resistance by coming up with these fib zones rather than just chasing these indicators around, which I think everybody else is chasing too. So that's what we like to do, anticipate zones of support and resistance ahead of time. If it doesn't work, we're going to have a tight stop just above and no big deal. If we get stopped out, and we will get stopped out, that's fine. No problem. But if it works, it should be relatively pain-free and an enjoyable way to trade. So that's my approach to the markets. It's a game plan. It's thinking ahead of the market like a market maker, not a market taker. A market taker chases price, no stops, trading by the seat of your pants. Compare that to a leading indicator methodology. It's something that you can be pre-planned. You can gauge your risk ahead of time. It's enjoyable. It's comfortable. It's trading with a repeatable process. Okay. So it's back to this slide. I really like this Tony Robbins slide. Anticipation is the ultimate power. Losers react, leaders anticipate. And I think it's all just about fib. If the market's moving up and you have a zone of support based on fib that you can come up with ahead of time, and you have the patience and confidence to wait for the market to come back into that zone. Everyone else who tried to buy this breakout, is like, oh, shoot. And then they're stopping themselves out, freaking out because the breakout failed. That's when you step in and buy, get a tight competitive entry, put a stop just below here. That's when you want to get in. And that's how you keep your risk low, your average stop loss size low, and your reward high. The best way to become a better trader in a shortest period of time is to get better entries, decrease the average size of your stop loss, and that's just it. That's the best way to become a better trader. The other side, holding on to winning trades for longer periods of time, that's something that takes years to do. So if you want, guys, I do have a course that's packaged up and ready for you. If you're interested and confused at the same time, that's perfect. It's exactly where I want you to be. So if you want to go to the next level, I do have a nice competitively priced course. If you want to get a little bit more acclimated to the way I approach the markets, it is called The Best Way to Trade Fib. This is my best selling course of all time. A lot of people have been through it, and the feedback was really good. So in this course, I'm going to share with you how to strengthen fib retracement levels using the support and resistance zones, FSZs and FRZs. That's the key right there. I introduced you to 2 of the 5 fib tools that are out there on the price axis. We're also going to show you the horizontal axis for time. Fib can be applied to the Y, which is the price, and the X, which is the time. Okay, price and time. Stop risking valuable capital and substandard setups. So in the course here, I'm going to show you how to do the following. So how to construct a fib support and resistance zone. I already mentioned that. I'm going to show you my 3 favorite harmonic patterns, my favorite time frame to trade, and for you to determine your best time frame. And it's based on your risk, which is called the art of the trade, which is account risk and trade management. It's a process I'll put you through. Trading rules, fib tool settings, I'll show you how to do that. Checklist, cheat sheets, entries, exits, stops, targets, how to scan, how to filter the best trades, stop getting head fake, trade with a plan, trade with some purpose. Peter, not so much options on this course. This is more just making sure you master fib first. So if you want to go to the next level with fib, stop chasing those indicators around, start anticipating the best setups using fib, we can do that now. I do have some options in it. I also have some stock. I do have some Forex in there, but this is more about fib only. So don't worry if you're only a Forex guy. This will definitely help you. So this is for traders who want to anticipate quality setups, who want to find turning points in the market others don't see with those fib support and resistance zones. If you can follow a simple set of rules and directions, and this is the most important thing, if you believe your success is taking to quality setups. Long story, really short. I know I'm bumping up on my time. Guys, I used to be the senior technical analyst for Forex.com, as I mentioned. I used to trade for the hedge fund at the same time. I used to make a bunch of trades in the hedge fund using fib. Some worked, some didn't. But I was also writing Strategy of the Day, which was a pretty popular research report at the time. And I would put one trade idea that was well-researched, that was thought out, that needed to be executed hours or days ahead of time. After 2 years of trading in the hedge fund, I went back and looked at all my results. The best trades that I had were the ones that went in the research reports. The rest of them were kind of break even and losing money. So the best trades that I had were the ones that were researched, that were written for clients to read. So in the back half of my career trading for the hedge fund, I only executed the trades that went in the daily research report that was available to every customer at Forex.com. So I can't tell you how transformational for me this was when I realized get rid of all the garbage setups and only take quality setups that are researched ahead of time, and you wait for the market to come into your zone of support, getting you a quality entry. This was the turning point for me in my career, being patient and researching the trade and letting it set up. All right, it's not the holy grail. I'm not a get rich quick guy. I like to work hard and I love this business. So this is not, saying I can triple your account overnight. That's ridiculous. This is not trading FYE for your entertainment. We trade to make money, and it could be boring at times. I'm not going to have you on the yacht with the Wolf of Wall Street. And this is not for people like to make things more complicated than it needs to be. It's all recorded. It's a one-time fee, yours to keep forever, or at least 61.8 years. It works in any market that's truly freely traded. Video course is over 15 hours. It's a 2-part course. I give you access from the 2015 as well as the 2016 course. Okay. Here's how you get a hold of the course. It is tradinganalysis.com/new. All right. And let me just make sure I didn't screw that up. I'm pretty sure that is the link, and that is the one. Yes. Okay. So here's what you get. You get the 2015 version of Best Way to Trade Fib, and you get the 2016 version. So you actually get 2 years for the price of one. Art of the money management, that's key. As I mentioned, I used to trade for a hedge fund, so I've learned a lot about account risk and trade management, and I actually show you how to apply the rules and capital management techniques of a hedge fund trader for the retail world. how to trail those stops, which is included in there, checklist and cheat sheets, profit taking plan, live trading sessions. I traded live for 3 days, recorded it. That's included. And you get the swing wave indicator. Okay, those are the purple and blue dots. I showed them. It was built, this presentation was built in Thinkorswim. So the swings are the purple and blue dots right there. Trying. Let me just go like this. Sorry, the studies. Edit studies. So the swing waves are right there. Okay, it's a script that I'll show you how to pull in. I've got them built for all the major charting packages, so that's included as well. Course is over $1,000 worth of material, and you guys get it for $97. Okay, 25 spots. We always limit this just because customer service. People always have kind of questions like how to install the indicator. There are videos to show you how to install the indicator. So you get everything for $100. Yes, Motive Wave, Brian. So it's built for Thinkorswim, Motive Wave, Ninja 7 and 8, MetaTrader, eSignal, TradeStation, Ensign, MT4. What else? What other charting packages did I forget? And I see somebody asking about Motive Wave. I use Motive Wave all the time. So here's my little Facebook setup. Motive Wave is great for Fib, by the way. So so here it is in Motive Wave. Okay, Thinkorswim, lifetime. Yep, yours to keep forever. And you will get a username and password to access on my site, which is tradinganalysis.com. And when you get the login, you'll go into the members area, and you'll have the course there in the educational course list right there. Okay, so it's right there. Best way to trade Fib. Okay, this is the actual course. There's the 2016 replay. It's only 150 minutes. There's the archive from 2014 and 15. There's the downloads, more coaching. Here's all the indicator downloads, Fibonacci cheat sheet, Motive Wave. This is live trading, more downloads, more videos. I think it's like 25 hours worth of content for $100. So well worth it. One of my best selling courses ever. I hope you guys enjoyed that and made a little bit of sense. John, unfortunately, Options House does not let you upload indicators to them. So the swing waves are not built for Options House. Ninja, yes, Doug T. Indices, absolutely. Yeah. I mean, I trade options on the NDX, the SPX, the RUT. I trade the futures. I trade Forex. Every market, anything that's freely traded, you can use this with. No, different course, Christy. Different course. You got the options course. That's the Fib and options. DAX, FTSE, yeah, Mohammed, absolutely. No expiration here, Ralph. This is yours to keep forever. Yep, absolutely forever. What other questions? What do you guys think? Did it make sense? You guys like? I've heard people say for me, it's like learning from me can be like drinking from a fire hose, which, I'm not going to give you a softball, just make it look real easy. I hit you with some pretty hard content right there. And I know the presentation starts off slow and there's a lot of fluff in there, but, towards the back half, we crank it up there a little bit. But you guys, those of you who are schooled in Fib, did you maybe come away with a different look at Fib, or was this kind of old news, or what do you think? Oh, thanks very much. Appreciate that. Yeah, awesome. Perfect. That's great. That's great. Appreciate that. Yeah, guys, I'm pretty proud of the course. There's a lot of, awesome stuff. This is all unsolicited feedback from the course. Didn't know how to find Fib time extensions and projections after a 10-year session. Cleared my doubts. I love it. Good insight. Great call on Facebook. Phenomenal materials. So yeah, it was good. Pretty happy. $100 and you guys are out the door. So hopefully you guys take me up on that. I am available here at tradinganalysis.com. Be sure to sign up for the newsletter here. We send out a daily video and I send out some kind of goofy videos. I do some YouTube vlogs and mess around a little bit, have some fun with this business because it's just a fun business. So guys, hopefully you take me up on that. And Winvesting, thanks so much for having me. You guys are awesome. Great presentation set up and scheduled. So best of luck. And you guys got a lot of good content ahead of you. So thanks. And I'll catch you all real soon.